Yep. How are you, crypto snipers? How are you doing? I don't know how this is going to pan out, but let's do it anyway, because that's what we do around here. It's in the doing and the trying that we found out what works and what doesn't. How are you guys doing? So firstly, a little bit off topic for crypto, but are you aware that Mondays is the most common day for heart attacks? Let me say that again. Mondays are heart attack day. I'm with Bob Geldof in terms of I don't like Mondays. Certainly not in a works way. So we're going to banish some Monday blues and jump on the old Enduro bike and see how we get on. So some of you might be asking, is a peculiar format for crypto? Yeah, it is. It's also a significantly less destructive format for crypto. The less you do, the less damage you create. I've said it already in a thread. These are not markets for trading. Let's say it again. These are not markets for trading. What is the main issue? Well, the main issue is the Federal Reserve and the central banks are fucking around. And as much as you think crypto is crypto, unfortunately, if the dollar goes super strong, it doesn't help Bitcoin. No sir, it doesn't help Bitcoin if the dollar starts going strong. The dollar is the god market of fiat. And the god market of fiat has strength. It's bad for anti-fiat. It's bad for all anti-fiats, including silver and gold. Fresh mud. I love a bit of fresh mud. And a torquey 500cc engine. Nothing much better than a torquey 500cc engine on a Monday morning. Apart from not taking any big pharma vaccines, you're going to have a whole bunch less heart attacks doing this on a Monday rather than trying to make money trading crypto. It's the truth, I tell you. It's the truth, it's the truth, it's the truth. So, interesting bit of weather today. Interesting bit of weather. Pretty hazy. Let's turn that engine off. I'm sure that'll help your audio. A little bit hazy. Which suits me for riding, actually. You're not going to oversweat. Some of you will ask, what's the bike? So let's show you. If you like dirt off-roaders, it's a Husky FE 501. Way more talented than I am in doing what it does. Let me rest assured, I have not tested the limits of this bike anywhere close. Let's take a look at the green fields So what are we talking about? We're talking about the best way to spend heart attack day Monday. Getting some exercise. Had a cup of coffee with dark cacao in it. Cacao's very good, by the way. Maybe you guys would enjoy to have Crypto Sniper coffee recipe. Quite an involved drink that I have in the end of the day. I do it every day. Yep. The ingredients, I should maybe record it. The Crypto Sniper's coffee. Bit of cacao in it. Cacao is mood enhancing. Yep. Mood enhancing. Natural. Non-pharmaceutical. Mood enhancing. In this great mental psyop that we're all facing as we wonder whether Bitcoin goes up or down. So here's the technical side without a chart. This is your chart before you, the fields. Big sell-off, high volatility. Into a low with a bounce back wick. Very dangerous to make technical calls straight after a high volatility event. You need to have been short before, picked up on your target at the bottom, and then you're out. Now you're sitting with this winding up structure that is potentially a continuation structure for the downside. Potentially a continuation structure to the downside. You've got central bank heavy week coming. A central bank heavy week coming. That's right. And I'm afraid to tell crypto people this, but they go, oh, but stuff fiat, we're replacing fiat and all of this. So you have crypto markets, beach ball, $2.5 trillion odd, Bitcoin and all the other alts. You have market equity total market cap, hundreds of trillions globally, hundreds of trillions. Don't forget, you've got single equities in excess of 1 trillion. You've got Apple. God, I can't even keep up with it. I think it must be, it has a touch 3 trillion. I think it ran 3 trillion recently. You've got one equity more worth than the entire crypto market cap. And then bigger than equity markets, which is no longer this tennis ball shape that I showed you. This much bigger ball, that's market cap of equities. And that is still not the biggest markets. You have the debt markets. Can't move hands big enough right now. See them going and inflating. And those huge, super huge debt markets, government issued debt the world over. And the reason you aren't familiar with them or aware of them and you keep forgetting about them, although you hear about debt and you know it's there, is because you don't trade government bonds. In fact, very few individuals do. But you probably have them in your pension and in everything else. Governments and investment banks are trading debt. That's why you're not familiar with them. And they don't have company names. They don't say Coca-Cola and have a red-white banner. They are anonymously huge, let's just say, in terms of you, in terms of how much you get introduced to that. Because the control structure doesn't like you to have that amount of information and even be that conscious of them. It's not serving their agenda. Then this whole bunch bigger than even the debt markets comes the currency markets. The currency markets trading in a single day, last guesstimate 4 trillion of trade in a day between just the euro USD, and it's virtually impossible to properly quantify because so much interbank trading is taking place and it's not captured on a day-to-day basis at all. That's why you don't have volume as a very reliable indicator. You can only get proxies from your broker. How much has that particular community traded Forex? So that's the order of scale down to our little 2.5 trillion market cap crypto. And when you have risk-off environments, as you do get with the talk of tapering, because that's going to mean Nasdaq crash, Nasdaq sell-off potentially on the growth stocks, not the ones that are delivering earnings, although they will still possibly fall later. The hardest fallers will be the ones that Cathy Wood are in, that are yet to deliver earnings, that are just a star in your dad's bag before you were born type companies. Those kind of companies are going to go first because they're selling a promise of the future that they've yet to deliver on. Apple, FaceAche, Schmoogle, and all the other criminals that are your data harvesting bastards, are already doing just fine and delivering cash. So that's why you get a nifty 50 type syndrome. But even if we have a big enough fall and the market is scared enough, the dollar scurries up in value. Everyone actually buys dollar debt, which is what the Fed would most like, because they've been eating the bulk of it. Remember, China hasn't upped its debt levels of the US debts from 1.3 in ages. And it's even divested and is stacking gold, and the discount window held open by the paper manipulators of the COMEX. So, if the dollar is the runaway escape hatch, the euro goes down, ergo our euro-Swiss franc trade. All of these macro elements play out. It is not a good environment for non-yield. Now you'll say, but DeFi, but this. I'm afraid the DeFi element is still also very, very new. Doesn't have the macro credibility, and if you're going to capital gains get a halvening, the fact that you're earning 10% or 8% is not going to be material. People will wait for the bottom before they get in. They don't need to wear the elevator down on a macro loss, a halvening event. So Bitcoin on its own doesn't give yield. In all the criticisms people lay on gold and silver, they don't give yield. But one of the features is long run the benefit, because they're both limited, while the dollar is infinite. So the day will come again, and we are still in a macro bull. Macro bull means monthly charts. However, it's our view, you're in a continuation pattern that will eventually squeeze higher, but you have to sit it out. It's a non-trading market. It's a dangerous market because it's going to hang on the words of a couple of central bankers muttering this or that at any one given point. So we're giving you a little bit of a laydown on why you need to actually understand these other macro elements. When Bitcoin had its first cup gold nugget break and it went solidly up, on monthly it barely had a single down month. And it had 8 or 9 months in a row up from 9,500 in our HVF all the way through to 64,000. It barely had a bearish month. The left shoulder of the future head and shoulder was probably one of them in a falling wedge. During that phase, the dollar was collapsing and faith in fiat was low because they were printing 7 trillion. So that was the end of Trump wrapping into the beginning of Biden. A year later, we see dollar strength coming, and we see the euro creaking, we see the lira falling apart. That is not the same macro environment. People are too associative and they think it's all about Bitcoin. Stock to flow, guys. It's all about Bitcoin. It's all about Bitcoin supply. But now their models have stopped working, because the other half of the pair is the USD, the God market of fiat. And I'm going to keep preaching this, because some of you are regular watchers will have heard some of this already before, but many of you don't. So if we get more fear and disinflation, which the Federal Reserve needs because they lost credibility on the transitory inflation story, they need to roll it all back. And they need to push that inflation onto Europe, because America's lost all the credibility on the inflation story. The Fed has lost all the credibility. So the dollar goes up and the euro goes down. The Eurozone starts to experience higher inflation. They need to kick it to them so that they all have a chance to ugly up. While the dollar is strong, BTC USD has a much bigger problem, because it's a risk-off environment and people are running into dollars, including buying, believe it or not, debt. Even though it's the biggest market in the world and will never get paid and is going to have long-term negative real interest rates for decades. It's going to be a guaranteed loser. But in a period of fear, the prices will go up, even though they will yield next to nothing. It's a safe haven. It's like getting into Tether when you think Bitcoin's going to crash. It's the much bigger equivalent of getting into Tether when you're afraid of a bear market. And dollar strength is bear market for risk on assets. High yielding growth stocks do not like high interest rates environments. So during this period of the Fed gonna do what it's gonna do and gonna fake pretend to do lots of meaningful interest rate hikes, you're gonna run into headwinds for crypto. That's the key point of this whole discussion. The key point is, not only do we look at the first cup gold nugget and how well Bitcoin did, everyone thinks it's all about Bitcoin. We also showed you the dollar index and the collapsing dollar during that period. Because in the final COVID crash, you had a spike of strength, blow off of dollar strength, and you had the spill low of Bitcoin into the sub 4K spike. And then the dollar reversed down, 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 print, 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 skid, 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 and Bitcoin went up, up, up from the 4K to 64K. Comprendo? Si, senor. Say si, senor, and hit the like button right now. Because you're getting it laid down to you in a way that no one else lays it down to you. Because this is called 360-degree analysis of a market. Plus you're getting a view on a Monday when everyone else is in an office fucking up and destroying value on their trading account. I'm telling you what to do by doing it myself. Go ride your fucking bike. Don't have a heart attack on a Monday because you're max vax and you're exhausted and you're tired and you had a shit weekend and it's all so depressing. Get optimistic, have a proper drink with a bit of creatine in it, a bit of coffee in it, a bit of cacao in it. Be a fucking man, be a stud, go ride your fucking bike. Do no harm. Sometimes the best thing you can do is to do no harm. So these chief satans are going to talk their shit the way they always do. They're going to pretend to push up rates. They will promise to do big push-ups of rates, 2 or 3 rate increases in 2022. They're going to say one of those two things. The market's going to go, oh my God, how scary. Fuck, run into the dollar, quick. Come the year that comes, they will not deliver as they always haven't delivered. I've made a career on Market Sniper channel by calling the Fed's bluff. We cannot exist in a high rate interest environment. That debt market is so fucking fat and lardy. If you even made it pick up its own fucking slippers, it would die of a heart attack. It is so fat and so lardy. So never mind lumping interest rate hikes. It won't make it. You'll go straight into reset. And once you start a disorderly descent, it cascades into stop losses and forced sellers, even people who don't want to sell. And the Fed knows this. In other words, markets are not as inherently stable as you think they are. If you cause a runaway stampede, even people who want to hodl can't. Because they're oversized, they never expect such a collapse. People tap them on the shoulder and says, we're going to get closed down. You got to close. But it's going to go up. Doesn't matter, mate. Doesn't matter. We can't even continue to operate. So you will have that level of sensitivity in a very high beta market. So they will pretend and act all tough, and then they will underdeliver. When it comes to the market realizing that once again, like Charlie Brown and Lucy and the football, and they're running to kick it, and you said, but you said 3 interest rate hikes for 2022, and they deliver 1, and the market shits the bed so bad they start printing ever more money and start calming it all the hell down. In the end, that's the point that Bitcoin starts fucking going. And we can't be ahead of the curve, even though we'll be right about this happening right now. Mark this video. Come back in 9 months' time. Mark this video. They will not do 3 hikes next year. I don't even think they can manage 2. But if they do, you will have a sustained period of dollar strength and you'll have a sustained period of Bitcoin weakness. But if they don't, and the market suddenly realizes, as usual, they are lying, talking tough, but they've got no backbone, no spine, the debt is too big, that's when Bitcoin runs again. Those are the key fundamentals, and that's what you needed to hear. Let's get back on that bike and ride, because Mondays are great days to ride, when everybody else is toiling. So I hope that kind of puts a little bit of perspective on how the whole big game goes. And all these Bitcoin I see chartists all the way, oh, it's just a return move to a trend line. And I'll maybe share the link to the tweet on the pullback. It's going to be back up, you know, same trend line as the trend line before it on the first cup gold nugget, a bigger version of it. It's a retest. It's not. The circumstances are different. Everybody tries to associate and see same as. You never stand in the river the same man. And the water running around you is never the same water molecule. Even a day later, just a day later, standing in that same river to your ankles, you're a different set of cells. It's water that had only begun its journey the day before at the source of the mountain that's now washing past your stinky ankles. It's different water, you're a different man. Not necessarily by a huge amount, but it's never the same. Associative thinking is one of the great dangers. Everything has unique circumstances to it. And fiat possible strength right now, subject to central bank controllers and what they say, are going to be more relevant. It is not the same dollar environment that it was on the first cup gold nugget. That 2.5-year continuation pattern for Bitcoin, we had lots of dollar strength pushing up. That's why Bitcoin never got away. That's what created the 2.5-year with the 20K high up top here. And the final RL2, that was the 4K dip, and then hanging at the 9-10K, the eventual break. That's once that all the things, all the dominoes were in place for the first cup gold nugget. That's what gave it so much super strength. It had to have the tailwind as well. It had to look like the right idea at the right time, at the right point when everything else was going down. And that's what runs you from 9K to 64K. And that is what is now working against you. And that's the reason why you probably won't see 100K like everyone predicted at the end of the year. And given this change in the FX market, we've had to rein back our forecasts too. There was, so some people say, but what about? So let's deal with some haters. Or not even haters, a legitimate question. Some of them are a bit sarcastic, but let's take it at fair value. What about your 84K call? A couple of comments like that. Fair play. Did we say 84K? We said there was a chance of an upside HVF to 84K. We absolutely said that. So, what about it? Why we aren't talking about it no more? Well, we had a couple of things that were unique to that 84K. It was slightly disproportionate second impulse, and it was a rush third impulse. As a result, there was too much buying along the bottoms, and it was a working HVF, but it wasn't a beauty queen. There's two things that happen with those HVFs. They still perform, because that buying under the dip is the beginning of a tsunami, which is very difficult to say after you've already run from 9K to 64K, or that strength fizzles and you later run the funnel. Where was the funnel? The axis of the setup was the 47.5K neckline for the head and shoulders. Look at that chart. I can visualize it right there. There's that head and shoulders, 47K. There's the sell-off where we told you to buy back at 29K. Then came the second impulse, then down. We said buy again there. You had a COT indicator buy there. You had a follow-up buy there. And then we went up, marginally higher high, 69. Dangerous. Shooting star on the monthly. Shooting freaking star on the monthly. Warning about that. That ain't good, guys. What happened? That weekend, we did live trading day, the previous one, non-farm payrolls. On that Friday, we said this is not a good market for crypto. We're almost at the month end. What happened that weekend? Spiller thriller. That big sell-off that you're now sitting at, looking at, and you're wondering now, is this continuation pattern for further downside? That risk is higher than you realize. So many people go, oh, so you're bear. Macro time frame. You've got to discuss time frame. Monthly macro time frame. This is a long-term macro bull for crypto. It hasn't gone away. It's not going to disappear. It's here to stay. You're in a macro bull. Smaller time frames, 4-hourly and daily, you are having a counter trend pullback where you've had a spill and you could be in a continuation for further downside. That is not an 8K run, in my opinion. Some people tweeting, you're going to run all the way to 8K. That would be an entire take back of the first cup gold nugget. Sorry, I don't see that. That would be exceptionally bearish, and you would have to then revisit your macro bull scenario. Macro bull remains, but pullback and struggle doesn't. Institutions are now involved. Institutions are not panic buyers and panic sellers. Low levels they buy when they perceive it to be low, and high levels they lock some profit for the year end. Where are you now? Year fucking end. What month is it? December, middle December. So do you think they sell on the 31st, in the middle of Christmas Day, when there's no fucking liquidity? No, they have been locking in a great year. Institutions have been locking in a great year. What happens January, February? They're all a bit light on what gave them their bonuses for 2021. They rebuy back in. They rebuy back in and restock on the alpha, the high volatility alpha that came. What happens between now and that January period? Potentially off-ski to the downside. Does that mean you're at a bottom in January? Possibly. Is that a call? Not enough information. It's a fundamental statement that I'm making. It's not enough to base a trade upon. Okay, they'll all restock, but you may see it happening, and you should be ready and willing to jump back in at that point. Look into my eyes, fantasize, fantasize. Whoops, hold on, I'm missing something here. Anyway, so that's a couple of heads up pointers on crypto, on where I see it's at. This is not a trader's market. Does that mean you should just be net short? What about shorting and making money on a sellback? Well, first of all, go back to point number one, macro bull. You are counter trend trading. Do I like that? Generally, no. Generally, no. You've got to be very smart, very confident, and downside patterns can also fail. We've just explained an upside pattern that had a disproportionately small second impulse and a rush third impulse failed. We still liked it and we still called it, and it didn't happen. We own that. We own that. We still liked it. We still said it could do, because the macro bull was making many shit patterns perform and average patterns perform. But the minute you broke that 47.5 and the stop on the funnel there, that was confluencing, and that's why we liked it, because that funnel was confluencing with the neckline of the head and shoulders as well, so it looked logical. The minute that was broken, the bull side setups were failing. That is a feedback event that makes us more cautious. Then you listen to the fundamentals and you suddenly see the Fed changing its tune. Headwinds. Headwinds are coming. Year end are coming. So what else do people say to us? Your COT indicator has given so many signals. So let's deal again with that. Your COT indicator has given so many signals. It's yours. Why are you not believing it? We absolutely believe in our COT indicator, but there's two kinds of signals. There's a compression between the 4 biggest sellers and the 4 biggest buyers. That happens for the first time after a broad period where there's a big difference between them and there's a coming together for the first time in a while. That was the signal at 29K. A very strong, clear signal. Then at the first move up after the 29, when we were buying and telling you to accumulate into the falling wedge, the first up leg and then a first down leg, again a signal. That was another good signal, but in fairness, it didn't get as far apart and then triggered again. It was a small push about. It was almost like a continuation of the others. In between, because of how we've designed the indicator, every time that they're within a certain distance of each other, it will keep generating the signal. That doesn't mean that's the key moment. It just means you're still in that zone of where you should have bought the first time. So it's not like 9 signals, it's 9 times more likely. They never broadened out. In other words, the sellers haven't suddenly got a lot higher and the buyers gone away. The buyers have stayed there and the sellers have stayed there. So they keep triggering a new signal and then off and then on again. So that shows buyers are far more balanced now to sellers. You didn't have this overhang. So that means people are still accumulating the big 4 institutions Bitcoin in this environment. That is the smart money for the long term. Year end though, I don't think there'll be too much accumulating unless there's one or two people that think January's prices will be higher. So they'll take off, if they were under on Bitcoin, all the others that have had it all year and are locking in gains, they'll buy it on the dips. So institutions trade differently, or should I say invest differently, because they're not even traders. They accumulate on dips. Anytime it's below a certain level, they have a fundamental value and they accumulate it on a dip. And then when it looks like it's overextended itself for a while, they take off a little bit and they'll look to accumulate it on a dip. And they're not doing that every day, every week. That is within a year, maybe three or four decisions. So that's how it's going down. So you should sit out the fireworks of these central bank bullshitters while they tell the lies they're going to tell and pump the dollar. If they get real serious and pump the dollar and say they're going to keep tapering and reducing and they continue, you will actually see then a Nasdaq correction continue, particularly on not the biggest tech equities, but the ones that aren't delivering any earnings or dividends yet. Apple gives huge amount of dividends. I think Buffett's getting 800 million in dividends over a year out of Apple. That's quite some fucking cash flow, guys. So on his holding, you know, he holds billions of Apple. Suddenly he's a value investor in tech stock. Isn't that interesting? Anyway, that point aside. So the ones that don't deliver earnings are going to fall first. Once they fall, and they've really corrected a lot, they're going to drag down even the ones that do. If the Fed makes that mistake, if this Fed gets too bolshy and they've got a very narrow plank to walk before things get out of control. So if they push too much on the rate rising, they'll cause crashes in the tech market, crypto market, and the FX emerging markets. You've already had the lira in huge distress. That's what's going down. If they get too clever, Dick, that's what's going down. So they talk tough and then call it back before they've done too much. That then pumps the risk back on again and everything goes fine for a while. So I think I've said enough on those concepts. Let's go see about this hill and we'll talk more about the others. We'll talk a bit about Ethereum BTC as well. So what about Ethereum BTC? Well, I said to you guys, if you want to trade cross-trip crypto, didn't I? I said trade cross-crypto. Let's try that phrase one more time. Trade cross-crypto. And one of the most liquid of the cross-cryptos is Ethereum Bitcoin. And we told you Ethereum will outperform Bitcoin. I love this berm here, check it out. Whoop, there's a car. Don't want to end up on his bonnet. So if you traded BTC with Ethereum, you should have biased Ethereum BTC long. And you would have done very well. Does that mean you chase in now? No, you're late. You're late. But had you done it when we said to do it, you are making BTC. technical structure. Be defensive as a result of that. That means opportunities to buy lower will exist. I've explained some of the reasons why institutions, etc., taking profits, etc. I'm not the only person who thinks this. Others have thought that. Get out and rest. Get off your computer. Give your eyes a chance to look at faraway things instead of an electronic screen. Look after your health. Maintain yourself in good conditions to be an effective trader. Manage mentality in these max-vax world actively before you feel down. Do things that naturally lift you up. Outdoors, exercise, cacao, other foods that are uplifting. Make sure you've got enough water in your system. Clean your water, distill it like we do. Lots of other things. Enjoy life, and I will see you when this continuation pattern moves forward a little further, and we'll see if it's going to be the short it could be. And it could also be, it's going to be something. If it isn't the short, it could actually be the first setup in a new trend that could give a bump. I'm not so sure about that one. If you are holding the gun to my head, I think they're going to keep talking the game for a while longer, because the Fed got to look real stupid for quite an extended period. That means they're going to rein it back for quite a short period. They don't want to straight away pivot back to stimulus when they've been talking reining back inflation. And they're going to pass the problem to Europe. Watch our Euro Swiss franc trade, our Euro USD calls. The dollar index strength period means that Bitcoin's not going to have it all its own way anymore. You're not going to have the straight line first cup gold nugget moves every time. You might have to be quicker taking profits if you're an active trader, or you have to just be patient as an investor. But the long run is the Nasdaq, the Bitcoin divided by the Nasdaq. You are somewhere here. Let me draw that again. Big first impulse with the head and shoulders. That was the 64K. Against the Nasdaq, it's about 4.8. One Bitcoin bought you 4.8 of the basket. You're up at the second point. You failed to make a new high against the Nasdaq. That means the higher beta Bitcoin is doing less well than an already high beta Nasdaq. And then you've sold off and you're coming down. I don't think you run this low. I think you get some support coming soon enough. And that's probably into January. And then you will drift up and you'll make a third impulse and you'll have a big continuation structure, and we will go aggressive long again. Because comparing Bitcoin against another high beta asset that is also sensitive to strong dollar and interest rates makes more sense than comparing it to the dollar right now. Understand that? The dollar is becoming too much part of the story. That's what you need to get. Love you lots. Thanks for the likes and shares. Catch you next time. All the best. Bye.